Okay, Andrew, we are here again talking about valuations. And today's topic, we're going to be touching on the gift and estate tax planning scenarios and where a valuation may be applicable and why in that setting. So tell us a little bit about why we would get a valuation or need a valuation if we're talking about gift and estate tax planning.
Yeah, so one of the things we've been seeing a lot of lately are gift tax returns, and this is where the estate plan calls for the gifting of the shares of the closely held business out of the estate. One of the requirements the IRS has in these situations is adequate disclosure. Our valuation reports can be tailored to these situations to make sure we meet the requirements of the IRS. The other situation that we see a lot of is once the estate is actually formed. For a taxable estate, the IRS requires that a value be assigned to the closely held businesses. The other instance would be when we don't have a taxable estate. A lot of times the heirs will go ahead and get a valuation so that they can assign a cost basis to the shares that they're inheriting, thus reducing their taxable gains down the future.
Right. And as we're seeing politically, the gift and the estate tax rules are really changing, and there's not really any kind of horizon on that, but it's really a good time to start looking at that now, right, Andrew? And what we would say is gifting a lot of that stuff away before the death, before the estate has been formed, can really drive that benefit up. And what we're talking about there is, businesses, these closely held businesses, a lot of clients will have a significant amount of their wealth built into these closely held businesses. And the other part to that is they are very their value will increase significantly, hopefully, over their life. And so getting that out of an estate as early as possible into a trust can really reduce the value of the estate and potentially get you out of a taxable situation at date of death when that estate is created. And so we find that really beneficial too. Andrew, any other points there of good planning? I know our team does a great job at that. Tell them a little bit about what we can do there.
No, I think you're absolutely right. The earlier we start planning, the better. We typically have a team that gets together and looks at all the assets of an individual, puts together an estate plan, and how evaluation can come into play there.
Yeah. So as always, feel free to give us a call if you're in that situation, and we can definitely help you on both sides of that. Again, we have a great estate tax planning group, and Andrew and myself can definitely help out with the valuations.